Larry, you were going to start talking about how you thought 2025 would end.
I don't see big changes. I don't see any reasons for big changes or swings in the market, just kind of floundering around, flopping around. Hopefully the current administration won't print a bunch more money like, we've been doing for the last 10 years. That'll just add more money chasing dumb deals and support prices. I don't think we need lower interest rates on conventional stuff. I think the market needs to adjust to it. That would be healthier for the country if prices adjusted to 6.5%, 7%, and they're making their way there.
Which is the median if you look at it over the last 50 years.
Where it should be.
Yes. So hopefully that continues. I believe we're kind of slowly tumbling that way. Hopefully that continues on. I like to keep an eye on outlier markets that I feel will feel pain earlier. Yeah. Desirable markets where some of us might, where we work more. So for instance, I mentioned Yucca Valley. Yucca Valley felt much pain earlier and harder during 2009, 10, 11, 12 than the Coachella Valley, and a whole lot earlier and harder than Corona and Orange County and Yorba Linda and Mission Viejo, and as you get closer to the coast. Other areas that have similar characteristics is like Adelanto in Apple Valley. You keep an eye. If you're starting to see 40% off in Apple Valley compared to just 18 months ago, there's pain either coming or it's about to get here. So I like to watch those outlier markets to help give me an idea what's going on. The other thing I'm cautious of is that I was fortunate enough to be able to keep a lot of the houses that I bought in 2009, 10, 11, and I still have them today. It was very nervous buying then. You would tell friends, you're buying real estate and they thought you're insane. I like people to hear what people that are not in our industry are saying. And you can kind of get a little bit into that when you see an article in a main newspaper, the LA Times or something, because those aren't people that are like us down and doing it. If the homes that I purchased in 9 and 10 weren't even as good as the deals I got in 10 and 11, 10, 11, and early 12. That was a prolonged amount of stuff that needed to be resold and fixed and bad debt cleared off. But I am a little cautious of when I do see the first best signs of buying. I'm going to still go a little cautious for the first 6 months. A lot of the people that come into the club and that I speak to, they're all like, I'm waiting for it to crash. I got money. So I'm going to let their money go in and buy a lot of that stuff at the forefront.
You're going to wait for the Apple update, not the first front.
There you go. Thank you.
So Dan, what do you see for the rest of 2025?
It's pretty murky, Joey. I would say that political climate is very unpredictable. We don't really know what's going to happen. Without getting too much further into that wicket of fun, I think things are going to be generally kind of as is. It's a muddle through. I don't think we're going to see anything too crazy. There's the pressure to get the Fed to lower rates. I don't know if they'll be successful, but I don't think they can go that low either. We're not going to see 2, 3, 4%. The market doesn't justify it. So it's a muddle through. Work your deals carefully. Know what you're talking about. Stay in your buy box. Make sure you know for sure the exact neighborhood and house type that you're going for, because things are getting hard to predict.